Good morning. Here's today's closing update. A few things to point out, and one very important thing just moving forward, which is the connection between some major stocks within an index and what that can mean. So I'm going to start off by explaining that. The first one we're looking at is Apple daily. So we already know that we had part of a topping process the week before with the weekly moves to the top, and it was also overextended. But then what happened yesterday, we're looking for reference points and we're saying, well, a red line is a daily support, and say that it held it. If we then look at the other stocks, or FANG as it's called, I'm going to zoom in a little bit here. Here's Amazon, and it held just above a daily support there as well. If I then do Google, see a similar picture, a daily level there. And then Netflix, which was the most powerful one, broke through daily support on Friday. We had a slam dunk. It very quickly went directly to the major weekly support. So that's held. That's a very important level. So 148.29. So things were coming together there that was connecting. I'll have a quick look at Microsoft, see what that did, see whether that was at a level as well. Not so interested in Microsoft. No, it didn't, but it closed back above a daily level. I'm just going to show you how that connects up with the NASDAQ. So I'm just going to drag this in from my other screen. And I showed you some stuff yesterday on the British pound, also on corn and on soybeans, and this is what day traders are using as intraday support and resistance. So the stocks primarily we're interested in the daily, and in technician primarily the weekly and the monthly lines. Like to keep it relatively straightforward, but the principles are exactly the same if you go down time frames as well. So professional traders have their intraday chart time frame of choice. It can be whatever they want. Some people are as low as 2 minutes on a pretty volatile market, something like crude, or the Buxel, which is a long-term German interest rate which can wing around. I've just done it on a 60-minute chart on the NASDAQ just so that you can see a decent amount of data. And what these lines are multiple time frames. So I'm just going to put my cursor on there, and in the bottom left hand side there it's going to say what those time frames are. So what I've got is 120, 240, 360 and 720, which is effectively a half day, so a quarter day and then a half day. And what I'm interested in is how these lines move and how they create support and resistance. So what was key on Friday was that everything got very, very condensed. If I scroll back, you can see that some of these lines were a long, long way away, and then suddenly the whole thing condenses up. So all the time frames are together, and we get a decisive break. On Friday, we had that mini flash crash, as it were. The interesting thing was yesterday, which was in the opening hour of when the cash market opens, we popped below the line, but then we couldn't close. And if we think about those major stocks, they were all at support points, and in Netflix's case a very strong one. And so there are times, it doesn't happen very often, where you can connect the major stocks to the actual futures or the index itself. Doing the scans this morning on all the ETFs and the American stocks, so scanned about 2,500 a day. What really stood out was, in spite of the market falling and then rallying back quite strongly, was the lack of signals. There was very little of note to hang on to, and on the futures and the foreign exchange markets as well, there also wasn't really much to report. One of our current positions is on the British pound. I had a bearish call for it at the weekend, and put out some notes yesterday about the 126.38 point. So this is the final support, as it were, on an intraday basis, and we held a few ticks above it coming into the close. I think the low was 3 ticks above 41. Had a little bit of a bounce this morning. 127.72 is the nearest reference point on the upside, so there is a bit of space there, but no doubting that the trend has changed. Corn is another one. Corn got hit yesterday. There was a little bit of rain in the forecast in the upper Midwest, which was enough to send some people to the exit, as it were. Week longs, people only got involved possibly late last week. Don't get any instant gratification. Support has moved to the bottom, so 376.25 basis July. The crop conditions came out last night. Judging by the price that's up a little bit overnight, I'm assuming that crops got a little bit worse. It's still very hot, and there isn't a great deal of rain in the forecast, so it's actually what does rain or does precipitate that's going to matter. So keeping an eye on that one, but in for the long haul on corn. There is always going to be volatility in a weather-based market. Moving on to precious metals, gold was pretty quiet yesterday. We have that negative call on it, 1255.7. That's the major support, so another 10 or so bucks lower. Silver, which is another one where we have a negative outlook on, was considerably weaker yesterday, broke and closed below a daily support, as you can see there, and now we have space to come down to the major weekly level, which is at 1606. A close back above 1733, which has been a reference for a while, that would remove the short-term negativity, but that's a fair way away. Crude pretty quiet. It's just sitting at this monthly line really, so not much to report. There was a few stock calls based on Friday's price action, so we'll just go through them. First one was Kanoko, opened, just gapped higher. These are daily levels, the pink and the red, so our major upside target is about 48.45, so another $3 or so. A weekly and monthly support, so that's very, very strong. We need a weekly close below there to say that the position is wrong. Had AFL, which broke out, not surprisingly on a breakout day. I think it was a new high, a little bit of a pullback. It was a slam dunk signal, but if you look at the close, not a weak close at all really. We know where the line in the sand is, which is at 74.50. XTL, which is an ETF. This was the only ETF that actually broke a support due to all that carnage, and we bounced. Just check what the high was. The high was 72.90, and our weekly resistance is at 72.92. So if you go into Slack, Jason, who's been with us for well over 6 months now, actually a bit longer than 8 or 9 months, so very familiar with the methodology. He put in a question today on the sector analysis, so it's worth having a look what he's been up to and what my reply was. So we're just going to finish up with the indexes, have a quick flick through. Start off with the E-mini. Went down lower and then closed back up again. Typical behaviour. Everyone keeps on heading for the exit at once, and then the market recovers. Nasdaq. Again, a recovery, never hit a support point. One thing that is interesting is daily lines are starting to move to the top of the trend. So they're going to be confirmed by the end of today, assuming we don't make all new all-time highs, which seems a little bit unlikely. If I go back to the E-mini, that's also doing a similar thing. So some daily lines threatening to move to the top. I do the Dow future. Still looks bullish, yeah. Nothing is moving to the top of the trend, so pretty rock solid there. If I do the Dow cash, it's just sitting around this monthly line, so pretty quiet ranges. We know that it's overextended, but it really needs to prove itself with a more meaningful correction before we get truly negative on it. Just do the Russell, it's one of my favourites. It's been had been the poor performer, right back up near the highs again, but nothing is moving to the top of the trend, so everything is still supports. Go to Europe, the DAX. Pretty quiet. There's a daily at the top. That's just about all you could say about it. Obviously, new closing highs would suggest another leg. Euro stocks underperforming because there's been some problems. The fifth largest Spanish bank went bust last week. Got bought for €1 by Santander. So the Euro stocks a little bit underperforming. The FTSE bizarrely benefits from a weak pound because a lot of the stocks are international stocks and they earn their money in foreign currency. So pound down, FTSE up. It's pretty quiet though, and we just finish up with Australia. Oh, there we go. Right, so Australia, that's a power play buy if you're on Technician. Real extension of range there. Jeremy's a lot closer to that market than what I am, so I'm sure he'll put something out and give some meaning to why it's actually done that. It's got this one daily level to overcome, so 57.95, which is not too far away. It does have two codes on CQG. There's a sort of like a pit hour only code, and then there's one that's like a 24-hour a day session. I do like to look at both, but I like both to confirm. And what's happened here is it's just about closed above the daily line, and we've just pulled back a little bit in a very quiet overnight session. Note that there is no resistance, so that one looks quite interesting. Do a little bit on bonds. Haven't talked about bonds much. Just shows how much I don't track all the news. Possibly it's the Fed this week, I don't know. There you go. Sometimes less is more. It's quite important sometimes not to know when things are coming out, because it can colour your view, make you nervous, give you an excuse not to do something or to be rash, all sorts of things. The only stat that I really know about is non-farm payroll, because it's always the first Friday of the month, so I can't get away from that one. But the rest of them I don't really know. This is the Treasury bonds, hasn't reached its weekly target. We had what's called steps, so this is a stepping process which looks at how momentum moves up through time, and that's on an intraday basis placed on daily charts. And that means that a 420-minute step process has ended. What I will do is I'll just briefly show you what that looks like. It's going to be medium term up and short term up. So let's just have a look. There we go. So this records multiple time frame steps. If you look at the bottom there, I'm doing 61, 22, 40, 420. The magic number is 4, and once a process gets above 4 and then resets to 0, which is what it did here. Ooh. Move it in. Yeah, so that 420 was at 6, reset to 0, and that's why that diamond appeared. You can see the previous time that it happened. Just going to do the ultra, probably showing a similar thing. Yep, okay. So what we had there was bear cage. That's a time continuation, not at resistance though. It was actually coming into support. and we've had the same stepping process, and there's a whole bank of daily supports and a weekly support there, so not overly interesting. Do the 10-year. A time continuation sell, but again, quite a lot of support. Key level 125, 23.5, because if we close below there, my friend, space opens up down to 122.24. Just do the short end, 5-year. Again, a time continuation, bank of support, weekly level at 117.20 3/4. Go on to Europe. The Bund has been flirting. This is the German. This is German 10-year interest rate, and it's been flirting with this weekly level 165.17. We've been a few ticks above it, but very, very quiet. Not much range at all. If I do the Buxall, which is the longer term one, which is far more volatile. Again, a bank of support, so there's a bit of a common theme there. And if I do the Bobble, which is the 5-year, a little bit weaker today, but again, a long way away from a major support, which was 131.88. We can see back in 11th of May, came down to this level, and that was a pops buy. That's that blue arrow, and then we had a timing point at the next bar at 240. Okay, it's been quite a long one today, even though not a lot's going on, so that's it for now.